So Bitcoin closed the week below $60,000 for the first time since February. And in this video, I'm going to be going over one of the main reasons why this could be, what could be next for Bitcoin and Ethereum, and some favorable altcoin long setups that could play out should we see a turnaround in price action. So let's start with the news then. Not only do we have the Mt. Gox refunds weighing us down, but we now also have the German government selling a lot of Bitcoin onto the market. As you can see in this article, they still hold another 2.2 billion worth of Bitcoin, and they've been selling it since mid-June. So that's what's been weighing us down, as you can see. So Germany still holds 29,286 Bitcoin worth 2.2 billion, according to Arkham. The potential selling pressure equates to 9% of Bitcoin's 24-hour trading volume, and it's been running down its coin stash since mid-June. So as I say, not only that, we've also got the Mt. Gox reimbursements, and it's not looking good, as you can see from the chart that we looked at earlier. Another article here goes into detail about where the coins have been sent to. So 133,722 Bitcoins have been sent to market maker Cumberland DRW, 150 coins to Kraken, 1,000 coins to B2CT Group, 300 Bitcoins to Coinbase, 300 to Bitstamp, and 1,000 to market maker Flow Traders. So as you can see, a lot of selling pressure on the market, and you can actually track the German government's actions here on the Arkham Intelligence. So here you can see it's the German government, and all through today, as you can see, there have been hundreds and thousands of Bitcoins sent to various exchanges, as I say, adding to that sell pressure. So until this lets up, or unless the market is able to absorb this sell pressure, we're likely in for a lot more downside. So let's go back and take a look at the charts of where we could possibly go next. So looking at Bitcoin on the weekly time frame, as you can see, a huge weekly red candle well below the 60.5k weekly support that we'd been holding ever since the end of February when we closed above it. You can see multiple taps of this support, finally broke down below it, and we also lost the moving average 21 on the weekly time frame as well, which again we have been above ever since October of last year. So big change of structure at the moment. You can see we also closed the week below that wick that we had back on the 29th of April as well. So to be honest, in my personal opinion, a bit of a no man's land at the moment in between the next big level of 52k. So not only is 52k a big level of support and resistance in the past, as you can see, but it's also the 618 on the fib from this most recent leg up in January, and it also is a 30% decline from the all-time highs, which of course is very common in Bitcoin bull markets. So we've not had a 30% decline in this bull market yet. So 52k, pretty big area. And of course, if you go onto the daily time frame as well, you can see that it's a nice big consolidation area around that 52k. So from around 52.8k down to 50k itself, big area of daily consolidation, which adds confluence to that weekly level of 52k. So at the moment we're at around 56. As I say, bit of a no man's land. So if we were to succumb to this German sell pressure, we may well go head down to that 52k level, which we really don't want to see a weekly candle close below that, because that could be a very, very big drop indeed. But at the moment, as I say, in and around 56. If we take a look at the daily, again, not much more to add in terms of the fact we've broken out of that daily range low, as we know, and now we're again in a bit of a no man's land on the daily time frame as well. Would not be surprised to see us come down and tag this 52k area. I do wonder whether today, it was very volatile over the weekend, as you can see, and this morning we had a huge rally, well, not a huge rally, quite a big rally, which has now sold off in the afternoon in the US session. So I do wonder whether this was just a short squeeze, and now we are going to eventually make our way down to that 52k area. If we go on to the 4-hour time frame, you can see what's happened. So last night we had a dump down to around 54k. This morning, nice big rally back up to 58, and then as the US market opened, we printed a bit of a divergence on the 4-hour time frame, as you can see. Tagged the 50 RSI, bounced off it as resistance, and you can see we've got a red trend bar still on the LC trend and momentum indicator as well, rejecting the moving average 21 as well. So in the short term, as well as the bigger picture, not looking too good for BTC. Would not be surprised to see these lows tagged. Whether we sweep the lows and then rally, or whether we make our way down to 52k, we'll have to wait and see. Let's take a look at Ethereum. Doesn't look that much better if we head to the weekly time frame. So zoom out a little bit. As you can see, we held these weekly candle lows that we created back on the beginning of April. These wicks down here at about $2,850. Held that quite nicely. However, we did lose 3,060 as a weekly level support. You see that's been a big level in the past as well. We also lost the moving average 21, similar to Bitcoin as well. So we've also tagged 3,060 and potentially rejected it as resistance as well. So that's not a good look. If we can get a weekly candle close back above 3,060, that would look good. But at the moment, not looking great. If we lose this level of 2,850, we are very likely to see 2,500. Big level of support there, and that's pretty similar to the Bitcoin level of 52k. You really don't want to see a weekly candle close below 2,500 on Ethereum, otherwise this looks very ugly indeed. The only ray of slight ray of hope that we have on Bitcoin and Ethereum at the moment is we are retesting the RSI 50 on the weekly time frame as a bit of support, both on Ethereum and on BTC. And as I said, with BTC we are sat on the 0.5 on the fib as well, so there is some chance of a bounce here, but as I say, we may well just be putting in lower highs ready for a trip down to 2,500 ETH and 52k BTC. In terms of the total two, so this is a chart that I've been keeping an eye on for the past couple of months, and it's all been pretty positive right up until last week. So I've been talking about the fact that 940 billion is a big level of support on the total 2 chart. Now, as I always say, so apologies if you've heard this 100 times before, but this is just an index, not an actual price chart. So take the technical analysis with a pinch of salt. However, you can see how well these levels have been respected on the total 2 chart. So as you can see, we were trending quite nicely. We're above 940 billion, which had survived multiple tests, and we were trending above the moving average 21 as well. However, last week, big candle drop below the moving average 21, below the 940 billion mark, and even on the RSI, we're below the RSI 50 as well. And you could argue we have already had a bearish retest of 940 billion. So not looking good on alts. As I said last week, it's probably risk off for alts for me personally, unless we get a candle close back above 940 billion and we can start trending up. With that being said though, if things were to turn around, BTC were to catch a bid and Ethereum as well, then we could see a bit of a bigger bounce on altcoins. And these are 4 pretty good setups that I think may well be worth looking at, as I say, if things do start to turn around. So as you can see, link on the weekly time frame, we're sat on these weekly range lows of around $12. You can see big level of support. If it loses this level, then we're going all the way back down to the bear market lows here, this bear market range that we had all the way through 2022 and 2023. And it's always at these levels that are, critical, do or die levels that you get the best entries in terms of risk reward. So at the moment, sat there quite nicely. In terms of the lower time frames, if we go down lower on the daily, you can see we are below the moving average 21, as you'd imagine. Still got a red trend bar on the LC trend and momentum indicator as well, and RSI well below the 50. If we go to the 4 hour, one positive sign is we have got a 4 hour candle close above the moving average 21, and we have come down and retested it, potentially holding it as support. We've got about another 10 minutes whilst I'm recording this video to hold that, and we are above the RSI 50, coming back down to and looking to hold it as support. However, we do still have a red trend bar on the trend and momentum indicator, and to be honest, in terms of the 4 hour time frame, you can see it is a little bit choppy when it comes to the moving average 21. So just because it's above the moving average 21 doesn't necessarily mean you're going to continue to trend. As you can see, it can be quite choppy on these lower time frames. So in terms of an entry, I'd say not a bad entry here. I would probably go to low size, maybe half size, definitely low leverage, maybe even just play it spot. In terms of a risk reward, let's say you did jump in here back to the range highs, you're looking at a 40% return. If you had your invalidation at a weekly candle close below, or maybe a stop loss just below today's candle body, which would be, let's zoom in here. So if you went below today's wick, in fact, you're still quite a wide stop loss at about 9%. So still a 4-to-1 risk reward. But as I say, you probably want to stay very low on the leverage indeed, or maybe perhaps wait for a confirmation of a daily candle close above its moving average 21. Because as you can see, we haven't had a daily candle above the moving average 21 since back at the beginning of June. So Potential, as I say, on the weekly time frame, but it's whether it plays out on those lower time frames, and of course highly dependent on BTC. Doge, very similar situation. As you can see, sat on this big weekly level of, call it 10 cents, just over that. Again, nice do or die level here, a big level of support. If it's going to bounce, it would be from here. If not, then you're looking at returning to the bear market range lows. In terms of the daily time frame, again, very similar situation to Link. Looking for, if you want to wait for extra confirmation, would wait for a daily candle close above the moving average 21 or above this daily level here of 12.2 cents. That's probably a much safer area to go along with the momentum. Of course, with these trade entries, because you've not got that, you're going against the trend. Obviously, you want to be very cautious, whereas it's a lot safer to go with the trend and momentum once you've got it. As you can see, red trend bar on the daily time frame as well, well below the RSI 50. If you were to jump in here, as I say, maybe if you went half size, or very low leverage spot, that sort of thing, 30% return back up to the weekly level of 13.5 cents. And if you put your stop or your invalidation below today's wick, that's about 7%. So again, still a pretty good risk reward. You're looking at about 4-to-1 risk reward on that. Next one is XRP. I know it's been a pretty trash coin to trade during 2024. As you can see, it's been terrible all the way since pretty much since April, but even then we've not really seen it do anything spectacular. However, what's similar to Link and Doge, we are sat on these weekly range lows. As you can see, we've not had a weekly candle close below this level since March of 2023. So huge level of support. You can see multiple taps of it throughout last year and this year. So again, pretty good area for a bounce. If we go to the daily time frame, again, similar situation as the previous two. Red trend bar still, maybe you want to wait for a daily close above this moving average, but again, pretty good risk reward. If you were to jump in here back up to the range highs, you're looking at a 73% move, and if you put your stop loss just below today's wick, it's about 7%. So you're looking at a 10-to-1 risk reward, which again, not too bad at all. And then finally, Gala. So I have no idea whether Gala is any good from a fundamental perspective. This is purely just technical analysis. You can't argue this looks like a pretty good level of weekly support here at, what's that, call it 2 cents. You can see big level of previous support and resistance in the past, and again, if it doesn't hold this level, then we're probably going back to all-time lows down at 1.2 cents. So big level, probably a good area for a bounce should it have one. Back onto the daily again. If you want to wait for a bit of confirmation, so maybe a daily candle close above the daily moving average, or moving average 21, or above this level here at 2.6 cents. You can see that was a previous level of daily support, probably now flipped to resistance. So a candle close below this and the daily moving average 21, and it looks pretty good. So nice little divergence you can see down here. Now it just needs a bit of a kick. Again, if you were to enter here, maybe if you went half size or quarter size, waiting for more confirmation. From here back up to the next weekly level, you're looking at 72% return, and in terms of a stop loss being below today's wick, about 8%. So again, you're looking at about 10-to-1 risk reward, but as I say, the stop losses are quite loose, quite high in percentage terms. So you want to either be low on size or low on leverage, or both. Maybe build up a starter position on one or two of these, or on each of them, small starter positions, and then add as you get the confirmations, such as daily candle closes above the 4-hour, above the daily moving average at EMA 21, above the RSI 50s, and above daily levels, etc. So it'll be a very interesting week, seeing how BTC reacts, see whether we get that confirmation of direction, see if we get that drive down into 52k, or we have a rally up to that daily range low of 60.5k for either a bearish retest or a deviation and a bullish continuation back up to those daily range highs. So hope you enjoyed the video. Drop in the comments below what you think is going to happen next and how you're preparing for it. What trades are you going for, and what are you dollar cost averaging into in terms of altcoins for hopefully the remainder of the bull market? Let us know in the comments below, and I'll see you in the next video.